Welcome to XFO Intelligence Podcast. I'm your host, and today we're diving deep into groundbreaking research on Hong Kong's stablecoin landscape. This episode examines strategic research conducted by Brendan Wong, who utilized the deep augmented thinking method after gathering insights from participants at the Fintech Week Hong Kong in November 2025. His comprehensive analysis reveals critical opportunities and challenges for stablecoin businesses in what's becoming Asia's premier digital asset hub. Hong Kong has positioned itself as a global pioneer in stablecoin regulation. With the Stablecoins Ordinance effective since August 2025 and the first licenses expected in early 2026, we're witnessing the emergence of a sophisticated regulatory framework that balances innovation with financial stability. Let's examine the key findings. The Hong Kong Monetary Authority has established a rigorous licensing system with substantial barriers to entry. We're talking about a minimum of 25 million Hong Kong dollars in paid-up share capital, plus comprehensive reserve management requirements. The HKMA is taking a high-bar, few licenses approach with over 40 institutions expressing interest, including major players like HSBC, Standard Chartered, and Ant Group. What makes this particularly fascinating is Hong Kong's regulatory philosophy. They're treating stablecoins as payment infrastructure rather than speculative instruments. This foundational principle shapes everything from reserve requirements to use case prioritization, building trust through enforceable standards rather than relying solely on brand reputation. The research identifies three primary market opportunities with real traction. First, cross-border trade settlement, particularly within the Greater Bay Area and ASEAN corridors. Stablecoins can reduce settlement times from days to minutes, while cutting costs by 40 to 60% compared to traditional correspondent banking. Secondly, B2B payments and treasury management, where large corporations show strong interest in stablecoins for intra-company transfers, supplier payments, and treasury operations. The ability to move value 24/7 with minimal friction addresses significant pain points in traditional corporate finance. Lastly, the tokenized asset ecosystem. As Hong Kong develops its market for tokenized green bonds, real estate, and ETFs, stablecoins provide the natural settlement layer. This represents a growing, high-value market segment with limited initial competition. However, the implementation challenges are substantial. The high barrier to entry, with total costs typically ranging from 30 to 50 million Hong Kong dollars, creates significant hurdles. The ongoing compliance burden requires 15 to 25% of operational costs for compliance activities alone. Brendan Wong's research outlines a strategic three-phase playbook for success. Phase 1 focuses on foundation building, Phase 2 on go-to-market strategies, and Phase 3 targets market leadership through differentiation and expansion. The conclusion is clear. Hong Kong's stablecoin landscape presents a rare combination of regulatory clarity, market demand, and strategic positioning. For businesses with adequate capital, expertise, and patience, the opportunity is substantial. However, the high barriers to entry mean this market requires serious commitment and resources. Disclaimer: this podcast presents research findings and strategic analysis for informational purposes only. The content does not constitute financial, legal, or investment advice. Listeners should conduct their own due diligence and consult with qualified professionals before making business or investment decisions related to stablecoin operations or Hong Kong's regulatory environment. For direct inquiries about this research or to connect with the researcher, interested parties can email Brendan Wong directly at xfointelligence@gmail.com. Thank you for listening to XFO Intelligence Podcast. Stay informed, stay strategic.